Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is Live Forex Market Review. So let's get into it. If you're on our YouTube live stream, I cannot see the chat, but for those in the webinar, if you can read through the disclaimer. Questions to the chat box and the question answer box. If you're on our YouTube live stream, I'll give you a link so you can come into the webinar if you want to. But other than that, I cannot see the chat. So you're more welcome to watch. For everybody in the room, please read through the disclaimer. Questions to the chat box or the question answer box, please. All right. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with us at our website. Go to acy.com market news tab, or a YouTube channel, ACY Securities Australia. If you want to connect with me personally, then my Twitter and LinkedIn handles are there. If you want to get access to the Telegram channel at ACY Securities, then just contact nathan.bray. If you want to get access to my chart lists and templates, then Nathan is the man to contact. So I'll put his details in the chat. And you can contact him about anything to do with ACY. He'll be able to help you out. Here we go. All right, so it's my last webinar for the year, and the market will generally be coming to a slowdown today and tomorrow. All right, so let's have a look at what news items are coming out for the remainder of. Pause that, it's going to start to make a noise. All right. So I'm at forexfactor.com here, time shown on Queensland time. And of note, over the last couple of days, we have Canadian inflation figures, which just picked up a little bit, just a fraction. UK inflation was a little bit lower than expected. And data coming out for the US tonight, final GDP QQ and unemployment claims at 11:30 p.m. Queensland time. And tomorrow we've got more UK news retail sales at 5 p.m. and Canadian GDP, and then US core PC price index at 11:30. And into the morning on Saturday, if you haven't finished, then 1 o'clock in the morning, we've got the revised UOM consumer sentiment. All right, so be aware, you can have a look at the news for next week, but be aware it's going to be a very slow week next week. In normal terms, it's very slow. I've seen it occasionally where we have very large moves, very occasionally, but generally, everybody's having a holiday. It's just best to have a holiday, right? Come back in the new year. All right. So the question hasn't really changed from Tuesday. We're still here on the weekly chart, the dollar index, hanging around the 62% retracement of the last monthly move up. We've pulled back to approximately 62. Are we putting in a significant low there or not? All right, trend on the weekly here is potentially down. We are to a lower bottom, lower top here at the moment, but we are hanging around here for now. Best part of 4 weeks. Yes, we're trading below the 62 level, but we're holding there at the moment. And we may be forming a little bit of a higher bottom here. If we trade above yesterday's high, we're going to form a higher bottom here. And I would expect that maybe we're going to come back up to test 103.60, the weekly high from over here. So just looking like it maybe wants to come up and feel this imbalance here, which would mean that's going to be negative for pairs to the US dollar. And S&P 500, I noticed we had quite a nice sell-off yesterday. Just getting short of the all-time high. So selling pressure coming in as we're leading into the area. So I said the other day, not an area to be a buyer in. You want to be a buyer, you want to look for a healthy pullback. All right, so I think over the next week, For this week and next week, we're waiting to see how this starts to unfold at the top of the market here. Do we pull back to maybe an area of weekly supports? There's a couple. There's one here at 46.37, and there's also one here at 46.11.51. I might just put that one in. All right, couple of good levels there that the market could pull back to get support. Now, the market may go to a fresh high next year, expecting interest rate cuts in the US. That potentially could be positive for the stock market. So we'll have to wait and see. But it's clearly an uptrend at the moment. The contentious issue is this all-time high here that the market has to negotiate. So if I was wanting to get long, I would look for a pullback to support at the moment. All right. Now let's get into the euro dollar. And I did just break it down, but we're failing at the 79% level of this range. We're back below it now. Potentially we can pretty much maybe class this as a double top. And we haven't had a candle down since we reversed on that candle. So a double top entry based on the day chart could be a break of the candlestick low for today. You could be putting your stop above this high, or this high, or this high, depending on how many pips you want to risk. And we could, if it's a double top, we could be coming back down to retest this low. 200% level target is at 104.29. So we had a massive rush up, and it looks like everything's stalling. We've got the 62% level over here from this major range. On the 4-hour chart, just want to see where I'm getting that line. That line is coming from over here. So right now, we just need to break below this area because it could be support at 109.29. So where it is right now is 6 pips away from there. So it's not a great area just to sell into. But, if we break down what's been happening, I think I discussed this Tuesday of this range, we could move up to 79% level. There's a nice 4-hour entry on the break of that inside candle. And you just really need, be nice if it could rally back up to, it probably won't, but it'd be nice if it could come back up to this area, this old high over here. That would be a great selling level. At the moment, the thing to concentrate on is not selling into support. Either we're going to rally back up and look to sell, if you can rally back up to 109.65, that's only 30 pips away. We could get there today, and there's a smaller range that we could be monitoring. So we could be monitoring this range for a rally. It's a range of yesterday, and 79% level overlaps with the daily resistance level at 109.65 up here. So that would be a great area to look to sell at if we could get up there to then come down and test this level. Now, we may not get up there. We may have already topped intraday here for the day, but this isn't a great level to sell into because 109.29 could be support. That's an area to watch. If you've got much more of a long bias, that is support at the moment. So then you should be looking down in that area for your reversal. But it is looking on the high time frames here that we could have put in a double top up here. We maybe move back down the range. There is rather a large imbalance here that maybe need to be filled. So, this could be moving down to fill this imbalance here. So as I was saying, can it give you a very high rally today within the range of yesterday? This area actually here, there's a very small imbalance in here that hasn't been filled yesterday. All right, fractionally filled, but not completely filled. So price can definitely come up to that area today. On any news release, I just have to refresh my memory for the news releases for the day. 11:30, we do have some news coming out there, so that could definitely just pop that up 30 pips. All right, Euro yen is struggling at this area of weekly resistance over here. When we have a range like this where it's got really overextended and false breaks this area of support, I'm always looking for the higher level. All right, I know it's failing from over here, but this is a higher bottom, higher top. At the moment, today we're testing this area of support. This could most definitely hold as support to continue this move back up into this zone that I've highlighted on Tuesday. So the 4-hour chart, whilst the 4-hour trend is down, this is support. We broke above and now we're sitting on top. So really you could be looking in this area. It's not looking very strong at the moment on the current 50-minute candle, but you could be watching 156.58 today for support to move back up. Now, clearly, if it breaks below there, so at the moment we don't have a trend line break to the upside or anything, and if we clearly break below there, then really, if we get a clear break below here, then you could be looking at 156.58 to become resistance. But at the moment, seeing as we moved above it, then this could now be support. We have been below it today, but then we want to get back above. So that is definitely the area to watch for support. Or does it flip to resistance at 156.58? Euro pound. So this is how I mapped it out on Tuesday, and it's actually pretty much done exactly how I was saying. So it does look like we're heading up towards this, back up to the monthly resistance level, the 79% retracement area of the larger range. We're at the 127 of the fib range that I put in on Tuesday. So really it's in the profit taking phase and it's hitting some resistance up there too. Just want to see where that is coming from. So the resistance area that we're now moving into is a weekly area from over here. So it's a great level to take profits at if you were long. It's also maybe a failure point because it's a 62% level of the monthly range or of the larger range here, of the weekly range where we move down to a lower top. Now I do have highlighted the 79% level further up, but we could just simply stall at 62 level. So that's definitely a level to watch. It's not really showing you any reversal on the 4-hour chart at the moment. It's a bit wiki, but there's no major reversal there at the moment. And I would be looking up here personally. But if you like the euro pound, you could, if you like this level, be looking for a 50-minute chart reversal, whatever your signal is to go short from this level, because it clearly is in an area here, 62 level and weekly resistance. This is definitely an area where the market can beat the sellers. And you can see the last 3 50-minute candles here, there's wicks here. So can what's your trigger for a short? Are you looking for a trend line break? If you can draw one in. Does this further reject? Can you see a trend line break through the day to trade down? But over the next week, don't be surprised if you move up to the 79% area of the weekly range. That's the stronger, most highest probability area for failure on this move back up. All right, pound dollar. So euro dollar, pound dollar are all failing from the large moves we had last week with the FOMC statement. See how it came back up and retested the high yesterday. Sorry, not yesterday, but Tuesday. Rushed up Tuesday. Actually, yesterday we retested it just to form the high of the day. And now we're moving down. So support is down here, 125.06, 12500 level. That area, that's probably where we're heading towards, and that could be then support to move. If the market wants to stay range bound through Christmas, this is maybe the target to then move back up. Longer term, we're failing at 62 area, so longer term into next year, we could be moving down. But through Christmas, we may just be moving down to 125. All right, 4-hour trend is down. There was a lovely retest of that last month's high, daily resistance level over here, and a 79% retracement. Perfect 79% retracement. Perfect fill of this imbalance on the 4-hour chart in that candle there. So really, in the short term, we could just maybe see a move below this low to the 127 extension, but then I would start to monitor the next range. So if we get down to 127 extension, I will then start to look for price to come back up and monitor the next fib range for the next top to form on the 4-hour chart. So something like, so it's a bit long, it's a bit too far down here to sell now. So something like this, then to come back up. And then down to the 125.06 level. All right. That's how I anticipate maybe the way price could do things. So there's not much room left to come into the low. I would have to, at the moment, wait for a rally. Now, if you don't want to wait, we have moved below 126.79. This is that weekly level over here. Just wanting to look at the range of yesterday. Not really seeing anything. All I'm seeing here is through intraday trading yesterday, we respected it. Once we broke below after the inflation figures, 126.79 became resistance. So that is the area to watch today. If we get a rally, we may only rally back to this level, 126.79. That would be the level to watch. Always looking to sell a rally. I'm not looking to sell a lower move. So hello to you. All right, pound yen is on support here at the moment. And 79% level is looking a little weak, but it is back into support after the impulsive move up. And back into testing the 79% area of the monthly range. This is a monthly low to high. We've had 2 rejections down here. So I think, yeah, we could definitely hold here at support. We drew in a fib across this little range. Just get this one out of the way. Then we're into the 62% level in this area of support. There's monthly support at 180.41. So, and we're just, we had a bit of an imbalance up through here. That's all gotten filled. So this is the area to fish for a long 180.41 to 180.67 at the moment, if you can see a reversal today. All right. It's just a question of biding your time. What is your trigger to get long if support shows its hand here? All right. All right, moving on to Aussie yen. It's 79% retracement. Too late to trade it now. If you haven't already traded up there, it's too late. It's failing at this top. So on the monthly chart, it's testing and failing at this monthly top at the moment. Previous month failed at this monthly top. Are we putting in a significant double top up here? I know that's a higher bottom, but maybe we're coming up to putting the lower top. So we've most definitely seen selling pressure up there. So it doesn't mean to say that we won't retest up there over the next week, but quite clearly 97.66 is very expensive for the Aussie yen. And on the 4-hour chart, it's already turned down here on the 4-hour chart, but that was where to get short. I would look at the moment for a rally back up into that area or close to over the next week. All right. Doesn't mean to say it will, but that would be the perfect area to watch for a rally back to or close to. And you could draw a fib across this whole range, the smaller range here, and look up to this 97.31 area for a rally. Assuming that's the low, it might not be the low, so you have to keep dragging the fib down if price keeps moving down. All right, so look where the outskirts of price support and resistance is as we're heading into the holiday season, and what is the market telling you? We may be forming a lower top up there. Can we come up for a further retest of that area over the next week? May be a very good area to get yourself short for a long-term move down into January. We'll have to wait and see what the new year brings. But I've been discussing that level for the last week, I think. All right, Aussie dollar, discuss this level. Tuesday, 79% level. Getting a little bit short of the critical 68.05 area over here to the left. Now, it could still come up and hit the 68.05 level. You know, if you're trading in here with 100 pip stop, there was a time yesterday where I thought maybe, okay, we're going to be trading through there. But no, we have a reversal day the next day. And what we're seeing today is a drop. Can you see a 79% retracement? It overlaps with the bigger 79% level. So 67.64 is the level to come up, retest. Could form a little head and shoulder pattern here. Left shoulder head, right shoulder, to initiate the move down from the 79% level. Okay. Whether or not I can get up there today, we'll have to wait and see, but hopefully you can see what price is doing there. All right, getting into the New Zealand yen. Day chart. Let's get rid of this fib. Just want to look, you know, we're on an uptrend on the weekly like we are on the Aussie yen, but we're very critical high levels, and you see how it's rejecting similar high, weekly high, to the similar thing to the Aussie yen, rejecting at the high levels at the moment. Not up to the high area of resistance yet. So personally, I would be watching 79% level up into these day chart area of resistance. Are we going to form a lower top? Could form some form of left shoulder head, right shoulder in this area. All right, over the next week, that's really what I'm watching. New Zealand dollar, very similar to the Aussie dollar. It's hit the 79% level, reversal candle yesterday. Could it come back up and retest daily resistance in the 79% level? 62.73 is day chart resistance. Right now, of course, here the trend is still up on the day chart, but the high time frame trend, here's the monthly. It's low, it's lower top, lower bottom. Are we forming a lower top up here into the new year? Same deal on the Aussie dollar. All right. So yes, the weekly's up and yes, the day is up, but we're in the critical 79% area here for our chart. Just maybe getting some support on these tops, but again, this is the sell area up here. I would just look at the high of yesterday to 79% level and monitor price actually moving back into that area. Clear reversal candle yesterday, and what you could actually do of the range of yesterday if you move down to a lower time frame. There's a range of yesterday, and then we've moved down a little bit more. Well, in fact, that is actually the lower yesterday and that spiky candle. So we haven't quite got down. Just going to use that range for a rally back up there. We haven't broken yesterday's low. Bit of an erroneous candle there, but can we come back up the range to 62 or the 79% level? Ideally, the 79% level at 62.85. It looks a long way away, but it's only 35 pips away. We can easily get there if some US news drives it up there later in the day. And there's also a little bit of an imbalance area that needs to be filled. All right, don't get caught at the bottom. How many times have you seen these imbalances get filled this year? All right, dollar Canadian just keeps sinking. Never broke above the high of the daily candle that I was looking for a reversal on support. So it's just been moving down. Had a bit of a pop up here to higher top on the 4-hour chart. Right, we have moved below the weekly low here. So inflation figures were positive for the Canadian side of the pair. So that's why it's remaining a little bit damp, a bit weak. And we could be coming down to the monthly support area down here at 32.62. You know, is this a double top where we're going to get a major breakdown like so? Or are we simply going to stay range bound? May stay range bound through Christmas, so 132.62 would be an area to watch for support coming in. If we start to close above 133.79, then you're looking at 130.79 to be support to trade back up the range. All right, so we're a little bit overextended here on the dollar Canadian at the moment. Yes, inflation figures were positive for the Canadian side yesterday, so it lends the idea that the dollar CAD could decline, but we're getting into low levels. Don't get caught at the bottom. If you're a long-term view of this pair declining, you really want to look at this range for at least a rally back up into this range to then sell to trade down. Don't get caught at the bottom. All right. All right, dollar franc. Since it's moved below 86.99, it hasn't been able to get back to that level this week. That's what I was suggesting on Tuesday, but we never got up there. So we're at very historical low levels. Going down close to the low of the year. We're moving below this low. It's quite strange. Dollar franc's moving down and the Eurodollar's moving down. Usually they go in opposition. Well, we're not seeing that at the moment. So very historical levels of support, low levels for the dollar franc at the moment. Yeah, I don't really trade the dollar franc, but if I was thinking about trading it, I'd be concerned that we're at low levels. So the monthly and weekly trends are down. And the day trend is down, okay? I would still, this is, last lower top was here, then we've been moving down. This is, do you want to sell at the bottom of a move? Yes, there was a reversal, a bit short of this low of the year. If you want to get short, I think the level to watch is still the level I was discussing on Tuesday, is can it come back up to 86.99 or close to that area and hold for further decline. Don't get caught selling so close to the low of the year. Right, dollar yen. So that's where I highlighted on Tuesday because I got a fraction short. I did say watch the fill of the imbalance. So we've been into the 62 to 79% area of last week's range, and this is probably, depending on how much trading is going on for the rest of the week, this could trade back down to the low last week. Doesn't seem to have too much of a bid on it at the moment. Had a bit of a bid after the Bodge policy statement, but that is starting to get eroded. So let's have a look. Can't have a week up. It'd be lovely if we could, in the first week or two of January, on the weekly chart here, see this come up to put in some form of lower top. So we've had a move down. Can we come back up to the 62, 79% area? That's what I'm really watching for. Just monitoring this pair at the moment. Can we get some form of healthy rally? We've had now 2, 4, 5 weeks and an inside week this week at the moment. So we're due a week or two. We're having a week up in 5 weeks, just an inside week this week. So I would anticipate we're going to have a week or 2 weeks up. And when that can unfold, then get yourself ready for a lower top to form. All right. I think it's just a patience game at the moment until the end. Will it be able to offer you a really nice rally? How are we significantly forming a major double top for a significant decline next year? Double top target 102.49. That is miles away. That's why I'm looking for a lower top to form. To try and hold a position maybe for a major reversal. We'll have to wait and see how it can form next year or not. All right, getting into the gold now. Not really moved much since Tuesday. Tuesday's close is here, big down on Wednesday, almost back to the close of Tuesday. Areas remain the same. Weekly supports at 2009. Monthly resistance areas at 270, 279. And really, we're almost in the middle of that zone. So I'd look to support or resistance for the areas to watch. All right, and as I said on Tuesday, markets through the Christmas period are going to get range bound unless something comes out significantly to gyrate the market. In all probability, we will stay in some form of a range. So, look to, as I said on Tuesday, you may well find the day chart candles being very much range bound through the period. And then what you have to do is simply then look to the outskirts of the highs and lows of the days. You may get a series of highs together, series of lows together, and if you have to trade through Christmas, look to the outskirts because those are the highest probability areas. And sometimes, the ranging through Christmas they're only like 20, 30 pips on the euro dollar. It's doing nothing. So it's really not even worth the hassle of sitting there watching the charts. Go and get some rest and do something certainly next week. So next week, there's only 3 days of trading, so you're not missing too much. Well, you won't be missing anything if the euro dollar is only doing 30 pips. All right. If you need to do something with trading, through next week, do some review. What's going to be your trading plan for next year? Maybe pull that together. All right. Get all your key areas of support and resistance drawn in for the new year. All right. Make sure you got marked in for the start of the year, the high of last year. If we talk about really a good one to talk about is the Aussie dollar. Whether or not, let's just bring up a fresh chart. We can find it. So this is just an example. But you could be doing this on all pairs. All right. This was the higher last year, which we tagged most in last month. All right. So that's the higher last year. That's the lower last year. So We're obviously closest to the high of the year because we were testing it in October. So that would be a clear area to watch. That was last year's. And that highest point there is this year's. So up there is a clear area to watch for reversal at the start of the year. As I said, we've already hit the 79% level. But into January, if we start moving back up, that is the clear area to watch for reversal. All right, so on all your charts, get in your monthly, get in the last year's high, or what's the high of this year at the moment, because we're not into the new year yet, but we're almost. Make sure you got clear references for the high and the low of the year, for this year and for the year before, especially if we didn't trade at the highs and the lows of the year before on any given pair. All right, because these are the areas where you're going to get the strong, when you come into the yearly high, that's where you're going to get the strongest resistance. If you're coming down to the yearly low, that's where you're going to get strong support. And you can often then get major moves from either level. So, it's almost a given if we come up to there at the start of the year to sell it up there with a 100-pip stop. All right, because last time it got up there, it moved down nearly 500 pips. So it's almost would offer you a potential of a reversal again for maybe a 500 pip move down. So that's how I'm going to be looking at my charts at the start of the year. Where's the major levels from last year? And what I try to do most of the time is I try to major in the major things and not major in the minor things. I'm not looking at small 50-minute highs and lows to try and trade off. I want to know where I can expect a major hit and reversal for a large move for a month or more. If we go to the euro dollar, I just tidy this up for the sake of looking at the higher time frame. $110 for a lot of the year. Here's the 110 area, 110.33. Really struggled above 110 all year. We did move up a little bit, and the most recent highs are just around about just above 110. So I can instantly see there that I can instantly see of this range. Let's just maybe say we're going to move back up. All right, I don't know if we are or not, but this high over here, which overlaps with the 79% level at 110.98, so 111, we didn't spend that much time above 111 in terms of days. We moved above and came straight back below. So if you move back up to 111 this year, in the early part of the year, that would be instantly, you should already know, if we move up to 111 in the first week of January, I need to be all over that level for a possible reversal. All right, so through the holiday period, get all your levels drawn in. Where are the levels where I could potentially expect price to really struggle at if we got there in January? And then just wait for price to get to the key levels. All right, not majoring in minor things, majoring in the major things, and then just wait. All right, so I'll give you that to think about through the Christmas period. Spend some time looking at the major levels, and you could go back over your favorite pair for the whole year and study where did it reverse strongly from, up and down, and start to work out why. It's probably because it came down to a key level of support from the year before or a key area of resistance from the year before, right? But you need to do the work. If you want to get good at trading, you need to do that work. All right, I'm going to wrap things up now because it's getting rather slow in the market, but I think I've given you lots to think about and what you could be doing over Christmas. All right. Other than that, I just want to wish you all a very happy, safe Christmas. Thanks very much for being with me through the year in the webinars, and I hope to see you next year, okay? And if any final questions, just type them in. For me, I will be back on the webinar front on, I have to remind myself, 2nd of January. 2nd, 3rd, and 4th of January, we'll be back. So I won't be here next week, but we'll be back straight at the beginning of the year. As there you want to look at the NAS 100, well, it'll be exactly the same as the S&P 500 at the moment. It is testing the all-time high on the weekly chart there. Here's your monthly look. Monthly trend is an uptrend. We did have a reversal, so there is the possibility here that you could look to that decline on the 4-hour chart. And if you wanted to be aggressive, look to sell the 79% level, trade down. So 79% level is at 168.05. The major high is at 16767. So between 16767 and 168.05, that would be the area to look for a retest today and a failure. We got up there. So there's a potential for the market to fail up there and of course have some kind of sell-off. Could be a short-term sell-off, could be a major sell-off. So it is showing a little bit of weakness up there at the moment. So, you know, if you're prepared to be up in the middle of the night, I don't know where you are in the world, but it will be, probably won't retest that area at all sometime in the evening or sometime in the early morning, my time, or after midnight. £10 yearly fib range has been extending downwards since around 2019. Well, a question on the pound would be the move that we've been having up this year after last year's decline. We've of course got this major range here. We came up in between the 62 and 79% level, and where we're holding at the moment, if you look at the major range, is we are holding at, we drop down to the day chart, the 62% level of the major range is right through this area of resistance that we're holding at right now. So potentially we may, you know, have had corrective like so on the major scale. We'll have to wait and see. So I'll have to wait and see how it maps out in the early part of the year. Do we start to see weakness in the early part of the year? So this year we've been claiming back all that decline, but we could maybe see that continuation of the long-term trend. Monthly chart here at the moment though is still higher top, higher bottom. But if we start to form a lower top, January, February on the pound dollar there, it is all open for a long-term move down for sure. Depending on, it's all going to be dependent on the, you know, how central banks start to look at reducing their interest rates next year. All right. All right, so we'll have to wait and see how December, you know, how early January comes around. All right. All right, everybody, we'll leave you with that last thought on the pound. Let's have a safe Christmas. And I look forward to seeing you next year. Okay, thanks, everybody.